everyone, it's Jordan Robertson with Benzinga, and joining me today is Brian Dalton, President and CEO at Altius Minerals Corporation. Thank you so much for being here. How are you?
Thanks for having me here, Jordan.
To kick things off, can you give us an overview of your company?
Sure. So Altius Minerals is a business that essentially accumulates royalties on very long life natural resource projects. So basically what we do is we collect a share of top line revenues from projects that might include copper mines or wind farms, but basically, natural resource interest, top line revenue based. And what that does is it allows us to benefit from long-term inflationary trends in commodity pricing over time without that offsetting marginal impact that the mine operators or the renewable project operator might feel. So it's quite a strong inflation hedge, if you will, on a long-term basis.
Now, how do you decide which projects to add to your portfolio? What makes a mine attractive for investment?
For us, when we look at a project, there's a number of elements that go into the due diligence. Obviously, it's long-term sustainability from an economic perspective, where it sits in the broader cost curve amongst its peers, but also in terms of how strong is its social license with the region in which it operates. And then when we think really long-term about just what potential positive investment attributes it might have, we typically look for very long life resource projects because those are the ones that, in our experience, tend to be invested in continuously by the operators. That results in extensions to the expected life of the projects. It often results in expansions of the output from the projects. And because we're royalty based, we share in none of the costs for those investments, but we do benefit fully. So it's really a measure of the long-term optionality that we find for these long life, very sustainable, and sort of forward-looking type commodity and mine interests.
What does it mean for your assets to be well aligned with sustainability-related global growth trends, and how do you ensure this?
So we are aware, I'm sure as everyone is, that there are some big forces at work in the world today. They're societal level and kind of irrespective of political short-term noise, but there's major transitions underway in the world. And these have big economic impacts, and they include everything from decarbonization of transportation and electricity generation, food sustainability. These are big scale trends that are bigger than any short-term government, democratic or otherwise, might like to believe. And we believe they will influence how the world's industry and economy will be shaped for generations to come. This is a historic moment in many ways, and we just want to make sure that when we select investment areas that we're on the right side of those trends. We're not stuck in the past, that we're joining in and participating in what the future will look like.
Brian, you recently reported royalty revenue for Q3 of just over $18 million, down from over $26 million in the same quarter last year. Where does this roughly $8 million reduction come from, and can we expect that to stabilize or reverse?
I would actually say the anomaly part of that was the higher revenues last year. That was somewhat unexpected, and it largely came from a bit of an extreme spike in potash prices. So potash is one of our royalty type exposures. And in the immediate aftermath of the Russian invasion in Ukraine last year, there was a lot of concern about Russian and Belarusian potash supplies and if they might make it or not to market. And it caused prices to run quite extremely. So it caused a major spike in our revenue. So I would actually say this year probably feels a little bit more normalized in terms of what our long-term expectations for those assets would have been. We still believe that those royalties will continue to grow and expand for generations to come. But I wouldn't read too much in the short-term drop as much as looking back to the starting point, which was a bit of a spike.
What regulatory changes are affecting your industry? Are there any coming that may spur growth or hurt it?
I think I'd have to open that a little wider. It's more than regulatory change. It goes to that societal level change that I talked about earlier. but it does drive policy and regulation at the government level. We've been positively and negatively impacted over the years, but I hope we're getting a little smarter about being on the right side of changes that will come, and just societal mandates that will result in new types of regulations. But it's not getting easier in general to execute natural resources projects. The regulatory regime continues to really just be more challenging all the time. The demands of society and governments continue to increase, and it's harder, it takes longer, it costs more, and the expected returns as a result of all of those challenges for the actual resource projects look continuously more difficult. On the plus side, what I would say about all of that is all of those extra challenges that are showing up now for the execution of natural resource projects are actually incredibly inflationary for the prices of the commodities. All of those costs ultimately get reflected in price. And so with our top line revenue-based exposure to long-term increases in prices, we're well positioned. So, bit of a double-edged sword, but I would say in the overall regulatory pressures and the impact they have long-term on prices is a net benefit for an Altius shareholder.
Amazing. Well, Brian, that's all I have for today. Thank you so much for being here.
Thank you. Really appreciate the opportunity.